Wow, everybody. So a major breakout taking place once again across the board collectively for the US financial indices. As you can see on my screen, the industrial average, as at the current juncture, we are up 186 points. This is at around 2 p.m. Eastern Standard Time, so we still have a couple of hours worth of trade until the market closes. But at this particular point, not only has the Dow Jones Industrial Average just taken out its swing high that we put in at the beginning of November, also the S&P 500 has done the same thing at the moment. If we close above these levels, this is going to be a new all-time closing high for the S&P 500. And most powerfully today, the NASDAQ, you can see in the top right-hand corner of my screen, we are up approximately 65 points. We have seen once again another gap above the most recent swing high. So some very impressive continuation signals, some very strong long day Morobozus currently underway, and this is very nice in terms of a continuation above moving forward as we round out the 2017 calendar year. Also, if I bring up the correct template, wrong template here we go. You can see the CCI is liking this on the NASDAQ. It is firming up above that positive 100 reading. The ADX, which is also reset, is now turning up. So you can see if I zoom in on this for you, this is really showing that this, or at least signaling that this breakout is a definitive breakout, a legitimate breakout, and we should see continuation into the future with this most recent move taking place during today's trading session. So there's a lot happening across the board in these financial markets. Over the weekend, we spoke about this in Pro, and personally, I was a little bit reluctant with the Qs, or at least to jump into the Qs. We did note it down as probably the leading market moving into the week upcoming's worth of trade. We weren't necessarily sure if the markets themselves were going to break out, but during today, as at Tuesday, we are starting to see this. What I've been more focused on is that of the industrial average and also the S&P 500. And one of the criteria which I spoke about over the weekend was to, of course, ensure that we see the same confirmation signals take place on the transportational average. So this is now, fast forward into the transportational average, what we have done is that we have stabilized around the support area and we are starting to turn back on up. So this is looking very, very good. This is also coinciding with the back test of past resistance. Now, we weren't sure if we were going to slow down at high levels at about 9,745. We overshot this, but really what we have done is we've just simply come back down and retested a stronger area of support. So you can see all of these past tags on the transportational average and now how it is currently holding in the month of November as new support. So again, we're starting to round the corner. Also, if I bring up the oscillating indicators, you can see that we actually reset into short-term oversold territory. This is something that the S&P, the Dow, and the NASDAQ actually haven't done. So now that we have seen this on the transportational average, there is a long way for the transports to actually rise over the coming months. And once we see a move roughly above 9,619 on the transportational average, this is going to confirm over the coming weeks and also months that we should see a legitimate breakout take place on the industrial average as well. So I'm really liking how these markets are firming up and how they are continuing to also bounce off from those rising exponential moving averages. So as you can see, not only is this applicable to the industrial average, to the NASDAQ, into the S&P, you can see how price action more or less moves sideways. This has been that consolidation as to what we've been sort of expecting over the past number of weeks. We didn't actually, or at this particular point, it doesn't look as though we are going to come back down and actually retest this rising 50. But what is important to note as I scroll through these markets is that we are once again bouncing off from these rising faster exponentially weighted moving average, the 10 and also the 20. Again, on the S&P 500, we didn't come all the way back down and tag the 50, which again just signals that of strength moving forward. You can see also the final market, the NASDAQ, we're bouncing off from that 20. EMA, again, we didn't come down to the 50. We didn't actually close the gap. And again, this is just another gap, another continuation gap at this particular point to the upside. So the price action underway is very, very nice. It is a very exciting moment right now, again, for active market participants, for technical swing traders, because there is the potential that we are going to see a bunch of those diamond trades and also SPY trades trigger if you do have them set up in your own account. Now, before I move into the individual trade analysis, let me just bring up that of the US dollar. It's something that I have been sort of laser focused on over the past number of weeks, if not months. I mean, I always glance at it. It's always good to understand the price direction, the temperament of that of the US dollar, especially if you want to trade that of gold and silver. And what we're essentially doing is that we're just sort of firming up around the support area. Now, we've been waiting for this pullback to more or less take place. It has happened. We started to see a bounce on Monday. I was looking for potentially continuation, a definitive continuation above 94.17. It almost happened during Tuesday's day's worth of trade. However, we are slightly pulling back off from that level. So we are down 12 cents at the moment, but this is still a very healthy construction. As long as we hold above this little swing high over here, and this is the pullback and this is the swing low, okay, I should say the swing low, you have to remain relatively positive on the price pattern, also the price movement, also the price construction underway on the US dollar. Why is this important? Because as the US dollar moves these hurdles, before we can see a true movement to the upside, if it wants to produce that, gold and silver is also going to be, relatively unmoved. So the longer we move sideways here, and until we see the US dollar really confirm or give us a clear direction as to which direction it's going to pop, you should be seeing that of a slowdown in gold and also silver. So over the weekend, I was speaking about gold, and we had this long sort of elevated volume spike. The green colored of it was a little bit misleading. I made a distinction of this over the weekend. Because that upper wick on gold and also silver is most likely camouflaging a lot of this green volume of activity. So as you can see on Monday, we pulled on back down, we closed the gap, we tried to push it up again during today's session. It's going to be interesting to see the final prints in terms of volume for today's session on gold and silver. But again, we're pretty much relatively unchanged. But what is most important is that we did establish that of a failed Bollinger Band breakout. Again, something that I spoke about over the weekend. So the trigger point for gold and also silver is that of the price movement in the US dollar. That obviously hasn't come about yet. So it's no surprise that we're still stuck in between support and resistance, and it is building. The volatility in gold and also silver continues to build. Again, if you see silver, a false Bollinger Band break to the upside, we're back within the two primitives. So you've got the upper and lower Bollinger Band. We're sitting more or less right on this 18 simple moving average today. It was looking, relatively promising at the beginning of trade for silver and gold, but a lot of those gains intra-market have been given back. And you can see even during today's candlestick construction after Tuesdays is that we're simply setting up that of a gravestone doji at the moment on silver. But let me just remind you, the main trigger of this is the US dollar, and just sort of cheat notes for you is that as long as we remain above this red line on my screen, pretty much above 92.80, you have to be very, or not very bullish, but you have to be relatively optimistic about the price direction of the US dollar. And obviously the consequences for gold and silver are trading generally counter, all right, to the movement in the currency, which it's priced in, all right? So very important relationship for you to understand. Also, if I continue the discussion into our top 12 list, much like the market, you can see a lot of these companies bouncing off their exponentially weighted moving averages. You can see we're bouncing off the 10 and also the 20 for Apple. Still not above that 176.12 trigger, but you can see just the collective narrative taking place. The Amazon has been in a sideways stair-step consolidation type of pattern. The first time we've actually tagged the 10 was yesterday, and you can see that we've immediately seen a bounce. We're up just under $11 during today's session, but at the same time, we're still within the confines of this sideways moving stair-step consolidation pattern. So as soon as we pop above 1,145, this should be off to the races for Amazon, and that's a relatively exciting type of trade. We've got Boeing Airlines again firming up. You can see very close to breaking out. If I bring up also the ADX and the CCI, the ADX is reset completely. The CCI is ready to go. And also we're bouncing off from those exponentially moving averages. Although they are relatively moving sideways, it is still considerably favorable. The same is true for Caterpillar. You see the picture and how it's being mimicked more so in the broader markets as well. It's very important that you understand this. COP is most likely drilling into macro support right now, and this is going to be the bottom of the move until we see the next leg to the upside. So hold in there if you're not in COP, or even if you are in COP. 51.23 is the next entry to the upside, and you've got the potential to again to pyramid into this position long term. So that's a pretty exciting trade as well. CVX is more or less still moving sideways. We haven't essentially filled that red box at the moment. Google is still moving sideways, but starting to see some reaction off from those rising exponentially moving weighted averages. You can still see we are below the bullish breakout trigger, but technology, much like the NASDAQ, obviously has seen a major break to the upside. So it is all very exciting. Goldman Sachs still moving sideways. IBM is also drilling into support. We are starting to flinch above our breakout trigger today. So you can see the breakout trigger at 152.04. This was after filling the gap. So we've been waiting for IBM to fill the gap. It has done that. We firmed up again above this 50 exponential moving average, and we're back above all three of these exponential moving averages. Also, if I bring up these oscillators, you can see that we're starting to register buy signals, and also the MACD is firming up in or at least above that neutral line. So things are looking really constructive for IBM as well. I'm excited about that trade. Netflix hasn't seen the same follow through as what a couple of these other tech companies have. All right, but as long as we remain above roughly 190, this is still looking to continue to the upside. Also, if I talk about Tesla, Tesla is a company that today strengthened up $8.50, so to speak. I still think we're going to price in higher levels, albeit short term, up to maybe as high as 340, but pay attention to any potential bearish candlesticks that once again develop around the high of Friday last week. Tesla is setting up, or at least producing that of a very bearish sort of macro top. You've got a long-term channel that looks like distribution. You've got breakdown volume once we've closed outside of the lower bounds of support. It looks as though we're going through the retest, okay, of that old support as new resistance. We've got the first bearish candlestick which showed up on Friday last week. And if we see a gain, or at least a movement to the upside on considerably low volume, again, that's just another clue to a major rollover taking place on Tesla. Now, the only other stock that I want to sort of update you on is that of Facebook. Facebook is still holding above that 174 pivot. I've been speaking about this a little bit in pro and also publicly here on YouTube, but you can see today we're up to $2.72 at the moment. We're getting very close to that breakout at 182.95, and also if I bring up the ADX and the CCI, you can see the CCI firming up, firming above that positive 100 reading. The ADX is reset. There's a lot of room for this to run. So if this is going to be a breakout and a legitimate breakout, Facebook has got the potential to run a very long distance. And you can see the first candlestick, which suggests that we are nearing the breakout. So very exciting times for a lot of individual companies, exciting times if you're looking to position yourself into the broader market indices, whether or not you want to do that through the Qs. Personally, I'm not. I'm looking for the diamonds and the SPYs, but outside of that discussion, you also have a lot of continuation signals, or at least developing signals taking place on gold, silver, which is backed by, of course, the progress which is taking place with the US dollar construction as well. So a lot happening in the world of the financial markets, and I need to bring this to your attention. So if you have any further questions, please don't hesitate. You can email me anytime. My email is in the description below. Have a fantastic Tuesday evening, everyone around the world. I'll be back with you most likely tomorrow to update you on, again, some more market advancements. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.